Good morning. So, markets are out of this range decisively. Let's say firing on all cylinders. Well, markets going up, multiple time frames going up, nothing to stop them from going up. So, obviously, we're getting closer to have something to worry about. Or just be aware that things that look too good, usually closer to some type of retracement. That being said, it's great that prices have decisively come out of this range looking at the S&Ps here. And the reason for that is it gives it the ability to pull back as long as it doesn't pull back deeply into this major resistance area, which would be a normal viable pullback. So as prices clear a prior high, we want to see it get well above that prior high. Meaning if when the highs are close together, this had a long correction between the highs. But when you have prices moving up, something like this on the hourly chart where prices pull back and they barely take out a high and then start to correct, that's a little bit of a short-term, especially on a 60-minute chart, a short-term concern because it tells us that momentum is slowing down. And indicator people would say, hey, look at this bearish divergence. It's not necessary because depending on the indicator you use and what the setting is, it may or not show any bearish divergence. But when you're using price for your analysis, you get the same results every time. So related to the daily time frame, this sideways congestion here, prices pushed up well above the prior pivot high, and it's coming up to this whole number, right, at 4,100 area, and give or take somewhere in here, which seems reasonable that it would hit that, or maybe just get up toward it. Sometimes it gets close to that number, and there's a lot of orders around that whole number. And sometimes it just doesn't hit it on the first attempt. So in any event, the analysis is it came out of here, this resting period. It did what it should do. And now at the point at which it begins to pull back, it has plenty of room to pull back to say even 4,000 or so and be a normal retracement within this move up. And so as we look at other markets, we see if they look similar. So the Dow, which had been leading, look at the distance between these highs. But this was a smaller correction and a really strong momentum move, the pullback, the consolidation, and then the breakout. So with a pattern like this, right, the last thing you want to see, just getting a little spotlight thing here. The last thing you want to see would be prices come back under that bar's low in the short term, because it rested, it broke out. It's not supposed to. It's supposed to continue to go high. So one market like the S&Ps, which could pull back relatively significant amount and not do any damage, if the Dow was to pull back and close below that bar's low, it would be a problem. Looking at, let's look at the Qs. Where are my Qs? Oh, here they are. Qs. Right. Cleared this range. Looks like it should be able to go up to the old highs. Yesterday's low, our first reference point of support. The weekly chart, pulling back within an uptrend. And this will be interesting, first of all, to see if it clears the high. And if it does clear the high, does it clear it decisively like the S&P did? Or does it just come up to that high and open up the possibility for an M-top type of situation? Well, that's something that we'll be watching for. No evidence of it just yet. And a nice move above here, and it's got room to go higher. And so this little congestion, I guess right in between here, these overlapping bars would be where it would find some sellers, especially, it's not gapping out, is it? was 331, 31.20. It was a little higher, give or take. So a little bit of anxious sellers here at the open. If this was a larger gap, you could be rest assured it was going to see a lot more sellers. The Russell's been lagging a bit. It was leading for the longest time. You remember that. And now it's got this sideways trading range. And now that it's stalled at this resistance, it opens up the question, head and shoulders top. More information that we need to get to see what develops. As to that happening, the further it goes up toward the prior high, the more that scenario isn't going to play out. Depth of retracement, which makes it at that point just a trading range. And transports continue to move up. They gapped up a relatively large amount compared to what normal gaps are day to day here, topping tail. So maybe getting a little tired. Backed off there. It's got an unfilled gap. And futures. S&Ps stalled right there on the top of the wide range bar. The moving averages are on Russell are pulling in and running parallel. Doesn't that look better? Well, the moving averages are tightening up because it wasn't an uptrend and now it's in a wide whippy trading range. So as more prices are moving within it, not necessarily healthy, McGraw. It's getting, as I said, wide and whippy. And after an uptrend, wide and whippy usually precludes a reversal to the downside. This is uncertainty. This is a picture of uncertainty where the bars begin to overlap. Now, as the moving averages come together and this range expansion and volatility begins to contract, right, which in a sense is what the moving averages are beginning to communicate, because you have more data that's being averaged in around this price level. There's simple moving averages, 20 and 50. So it's dropping off 20 days ago and 50 days ago and averaging in the current 20 and 50. So that doesn't change the fact that resistance is up at here and the pivot high, and it's a wide whippy range. What we have to see is development of this price information that begins to tighten up further, and bar by bar analysis will begin to tell us whether it's healthy or not. So we really don't know yet. That's why we look at all of these markets and say, well, the Russell doesn't look like the S&P. And before, the S&P didn't look like the Russell when it was going up. So is this a precursor to others becoming like that? Well, I don't know. That's the honest answer. I don't know. And so as this begins to tighten up and we start to see things like more gap reversals occurring, red bars being ignored over here, that type of information would say, hey, that's shaping up as being healthy. Versus if we see gap ups and big nasty red bars that follow through lower and this becoming a pivot high. So the information isn't clear yet as to whether this beginning of a trading range, which is wide and whippy, is going to create a top or eventually a resting period that goes higher. For the resting period scenario, this is going to have to tighten up significantly. So it's going to take some time. All right. And YM we looked at, we looked at diamonds, gap up so far inside bar, a long ways to go here. In no way should this come back under Thursday's low, right? This can chop around here. Ideally, it does not even fill this gap because the gap up was a continuation of this resting period. So ideally, if it's going to consolidate today because of the gap and the continuation yesterday, it just chops around here. And then possibly if we were to get, let's assume that today is like one of these boring go nowhere days, right? And we get an inside day. And then tomorrow opens lower under that bar, but closes strong. That's a continuation long bar. That's what we call a correction bar. When it trades under a prior bar's low like that after a strong move, and we get a bottoming tail bar, or you get a gap down that turns into a big green bar. So we'll see. Right now, we're just kind of running in place, going nowhere. Pivot low, look to the left, right? Let's see what happens. And Qs right, coming up into this congestion area that we looked at yesterday, had a nice move up. Futures here for the Russell, right? Gap, this was the week right from the get-go, which was interesting that, this came down to fill the gap and the other markets just marched higher. So money rotating out of the small caps, which were in favor, and just went up relentlessly. And now we've got this wide would-be trading range going on here. So now that we do have that gap up in reversal, let's see what happens today and into tomorrow if need be. Meaning, if today's bar, and this is common sense, but the power of what we offer at Master Trader of a thought process and something like bar by bar analysis within the patterns that we look at. If today's bar turned out to be a big green bar that closed up here, what would that tell you? We all know. On the other hand, now that it's here, if we had a big red bar that closed down here but held a 50 MA, it would tell a completely different story. Now, the green one would be much more in alignment with what went up here and what we've seen in other markets. Yet, the destination isn't that far off, whereas a pullback here, it's got a pretty significant support area there. So either way, whichever bar forms gives us enough information to be a little more decisive than today, but it's not going to change, the high up here and the low down here and the mess that's going on. So we're kind of in a limbo kind of scenario here for the moment as far as the Russell goes. All right, bonds, just kind of chopping along the bottom here. We know it's in an area of support. The 10-year just kind of hanging. This is that idea of the slowing momentum here. And then this is even tighter, but it hasn't been able to make the turn or make a decisive kind of a bottom. Whereas over here, some bottoms take a longer amount of time. And the longer bottoms, or more rounding kind of bottoms, are ones in which that are supportive of a larger move. Now, this market over the last few years has been one in which, coronavirus V bottom, we're all going to die versus, hey, no, we were kidding, V bottom and straight back up again. Kind of crazy, have bear market in 30 seconds and back to bull market. But that's the idea of rounding bottoms are more reliable as far as meaningful moves versus V bottoms. Gold coming off of the low there, coming up into resistance, likely to stall, but we got that bottoming tail from last week. Let's see if it can go sideways here. Silver, kind of messy. Off of the low, look to the left on support. And the 10-year down here, the yields here, still just jiggling around. So today's looking like it may just be a resting day after yesterday's power uptrend day. Just looking at the spiders on the yesterday, just pivot highs and pivot lows on the 5-minute chart, until things began to just get real choppy in the afternoon there. So there you have it. S&P just looks like it has to go higher. There's unfilled gaps down here, so set alerts. That's a pretty sizable gap, and it was interesting that it didn't attempt to fill it at all. So it was, buyers jumping all over themselves again yesterday. That's what they do. Buying hand over fist, and then, maybe a day later or the next day, they're hitting the bid like it's a bear market again. So a little crazy. There's a void below now. So you can see the 15-minute chart. Well, that's sideways move. So a move under here opens up the door to some retracement, and we'll measure that as it unfolds. All yours, Dan.
Morning. Yeah, that was our bias yesterday. Still bullish until it's not, or the internals get more cooked. But yeah, inside day would be healthy. All our opens are fine. I'm not going to go through them. Ask if you have any questions. We have, the last 3 trading days have been incredibly active, and we've been, although we picked up one short yesterday, it's very bullish, so we've been riding it.
By the way, Dan, I forgot to mention anything about internals, but yesterday's breadth was actually terrible compared to a market that gapped up as it did and power trended during the day. The breadth was like 800 compared to, on a day like that, it probably should have been 1,500 to 2,000 at the close. So something, kind of like, well, S&P still closed strong as hell and looked great, but we surely would have liked to have seen the breadth a lot stronger with a move like that.
Yeah. Google was one of those powering stocks yesterday, so that's what made me think about it, because you're talking about breadth, and this is obviously a $2 trillion company, and so with a move like this, that's what it explains the narrow breadth if you have a bunch of these. But I read in the cover of the journal today that they want to copyright software infringement at the U.S. Supreme Court. So I don't know if that had anything to do with it. I'm sure partially. The thing was gapped up and was on a tear yesterday. And also I read in today's paper that LG is getting out of the mobile phone business. So that obviously is a plus to a competitor, right? Romeo, yeah, it's been very weak here. Gapping up though, it's a bullish pre-market, so maybe 15, 30-minute high. You can buy the pre-market high, target gap fill. Now here, tomorrow, MT Live talking about bottoming patterns. And Greg made a comment of, V-bottom. V-bottoms are not as reliable as a W-bottom or a consolidation breakout. And here's kind of an example. Here was a V-bottom. Deep retracement, so that actually was a good sign. But you still had declining 20, 50, and there was no great bottoming pattern there. Aries, I don't know what's up. This is ugly gap pre-market, $54. Wow, all the way back down to this gap breakout. That on the weekly chart, that's going to make this a topping tail. That's ugly. Rosas, EXR, NTAP, EXR. I'd like it to go sideways a little bit more, but looks like it's at all-time highs. I was saying yesterday that there's just there were so many bullish patterns the last 3 days. It's going to be harder now. Just the more overbought you get, the harder it is, because they're either extended, or if they're not extended, that means relative weakness. NTAP also, I needed to go sideways here a bit. Look at the BP I posted, and the oils kind of were definitely weak yesterday, but this one now is gapping over yesterday's high, a little retest pattern here at 50, so I like that one. Oki was in our weekend letter, and I left it. I mean, this is still a valid trade. Rising 20, 50. If it can now break out after yesterday's weakness, that makes it better. So Oki looks great. I'm going to put that in a separate window over here. That's Jose, Len, Polte told you Jose's liking the home builders. We're in Polte. Len, we're in this in trail mode. Looks great. Len, Toll, Beezer. I mean, they're all fine. Maybe 30-minute high. I mean, XHB is all-time highs, even with interest rates rising. Matt, OMP, VVPR. OMP, we're actually in also. Yeah, no, we're in this long already. And I said to the green room, you can add over the highs. Absolutely. OMP looks good. VVPR. Sure, over the highs. I see it gap. There's one print here gapping down, but yeah, that's a bottoming pattern. Absolutely. But sometimes we talk about getting into things earlier because the weight of the evidence says, hey, if it takes out that bar, then it's likely going to go through these. This is not one of those, because I got 3 tails. So this one over the highs, set an alarm a dime early, and then I like it. Steve, HPE. It's not a cup and handle. It's more of a reverse head and shoulders. It's gapping down a little bit here, so yesterday's high is fine. But I promise you're not going to get as many trades from us today. You got to nail those turns. When you nail the turns, it's easy. We still have 35 open positions in the advisory letter, and I think 14 in the weekly options trader. And we were actually starting to take beautiful profits yesterday on a number of them. Cisco, GM, BD. Thomas is asking about a number of things we're in already. Cisco gapping down. It's far from the 20 and 50, so not crazy about it. GM, we're in a put spread already. And see, the momentum is slowing today, folks. So please do not get complacent. I'm going to be very selective on new longs, but you should have been in this already. DD, I see no pattern unless it takes out yesterday's high. Okay, let's continue. What was that? Aries, we talked about. Oh, GME. I want to keep an eye on this to selling out of the money put. I had a nice recovery after the secondary offering announcement yesterday, and it's still holding the upper 50% of this. We could sell the 1 1/4, the 1 1/4 puts naked for Friday are still a buck and change, but it's at resistance, but it's worth watching. SPCH, this SPAC ETF, another bottoming pattern, right? Big old bottoming tail at major support and going sideways. So this is a beautiful bottoming pattern. Fun, gapping up 217, big gap to resistance. It looks like a day trade toy. G-Nog, retest here, new low, retest, bottoming pattern, gapping up to here. It's a bullish pre-market, maybe 30-minute high. Playboy here, I don't know what is up with the Playboy, but still in a power uptrend on the 15, but uh, let it gap up, 3 more days, but I have this on my list of short once it runs out of steam. ICAD had earnings, no problem. I mean, no pattern, little breakout failure. ILMN had earnings, bullish gap. We'll keep an eye on that for a put spread. Hey, Debbie. 46 bucks. This is a nice bottoming pattern. Debbie, tomorrow, MT Live is for you, bottoming patterns. Came down, went up, retest, now gap breakout. It's a bottom. It's a short-term bottom. So let's keep an eye on that. KGC. Yeah, a number of these gold stocks were bottoming us. I think I was looking at AEM yesterday, bottoming pattern right there. KR grimy. No pattern to me. I don't like wide range bars and then they stay here. Or see, I don't even know if you're thinking long or short. So that's not a good start, right? I don't know what to do with this. Nothing's jumping out at me. No, KR is not a good long. This one is, gapping up. I like the weekly retest, but I don't like the daily. It's now a greater than 100% retracement. We don't buy greater than 100% retracements. But like I said, that's a bullish weekly retest pattern. So that I like. But if you're trading the weekly chart, then you need a big stop, right? My Bitcoin alarm just went off at 85 bucks. That's on our little, another bottoming pattern, breakout from a bottoming retest. VIPs, I was reading in the journal that Credit Suisse was selling $2.3 billion of, these beat up stocks that got them into trouble the other day on leverage. The Credit Suisse is doing nothing on that news, but the paper said they were selling more. They were selling Fitch. No, not Fitch. They were selling more VIAC. I have this on a long watch list, believe it or not. Or if it's swan dives again down. No, it was VIPs. They said they were selling. No pattern though. No pattern. GBX, ugly gap. This could be a 30-minute low short. 30-minute low. I like that. Oh, talking about Bitcoin, all right, so yeah, the 15-minute charts on the Qs, spiders, diamonds are bearish right now. If you're just looking at the 15, kind of gapping under that end of day base. So let's see what happens here. Are we going to take out a 15-minute low or 15-minute high? Oh, but Bitcoin, yeah, I read. Look at Netflix here, powering in the FANG department. We have long calls on Apple. That we entered over Thursday's high. What was I saying? Oh, the journal said China. China is now getting into the Bitcoin. They're going to come up with their own Bitcoin. China. I just had an alarming triple D